Indian budget is upon us. The finance minister has promised a budget like never before, sparking hopes of a major reform agenda to get growth back on the high trajectory. CNBCTV 18, in association with industry body CII, has polled over 100 CEOs to gauge the mood of India Inc. ahead of the budget. The survey was conducted between the 13th of January to the 23rd. The poll was anonymous in nature. 42% of the CEOs who run companies with an annual turnover of less than 100 crore rupees. 21% of the CEOs polled run companies with a turnover of 5,000 crore rupees. So the poll has a good mix of small and large businesses. Now, with expectations running high, does industry expect a milestone budget like the one we saw in 1991 or 1997? 40% of CEOs say yes, they do expect a milestone budget. 29% don't seem to think so. Let's now get down to the brass tacks. A majority, that's 48%, say that economic recovery so far has been above their expectations. Another 36% say recovery is in line with expectations. But let's talk about demand. A majority, that's 49%, say the demand is now near pre-COVID levels. 21% say demand has never been better, and 30% say they're still hurting due to the lack of demand. What about the state of business operations? 40% say operations are near normal, 26% say completely normal, but nearly 30% say there is still some time to go for normalcy. So are CEOs ready to deploy capital to expand or diversify their businesses? Well, 54% say they are ready, 46% say they will wait for 6 more months before taking a call on potential expansion. What about hiring? A majority, that's 56% CEOs, say they are in wait-and-watch mode when it comes to hiring. 38% are upbeat. And finally, when asked about the biggest threat to economic recovery, 55% of CEOs say they fear rising input costs. And we have seen input costs go up significantly. So rising input costs, the number one fear factor. 27% fear lack of demand and 18% fear a lack of liquidity. Well, joining me now to discuss the mood of India Inc. as well as the budget wish list is TV Narendran, the CEO of Tata Steel and the President-designate at CII, Sanjiv Bajaj, the Vice President at CII, and Chandrajit Banerjee, the Director General at CII. Gentlemen, appreciate you joining us here on CNBCTV 18. TV Narendran, clearly the mood ahead of the budget is one of optimism. There is confidence. There is hope that the business recovery that we have seen will get more legs post the budget. Now, are you in the camp that believes that this is going to be a milestone budget like 1991 or 97?
I think the opportunity is there, and the finance minister has given enough hints to say that it will be a significant budget. So we're looking forward to it from that point of view. And I think there's a great opportunity to do that.
Okay, so Sanjiv Bajaj, if you are hoping that this is going to be a big bang budget, as the finance minister herself has promised, in fact, she said it's going to be a budget like never before, a 1-in-100-year event. So let's ask you about specifics. What is what are the top priorities that industry is hoping to see this budget take forward?
Shireen, this budget needs to think about not just the next year, but the next 3 years. The next year, of course, is important, but for the next year, what we would like is the budget to continue to do a lot of what it did in the last 6-8 months, what the government did in the last 6 or 8 months, which is really to look after those at the lowest part of the pyramid, is to support financially those in the middle, the SMEs, and then to support key sectors that have still not come back to even 80-90%. So that is what is required for the next year. We know the next year will give us an 8 to 10% growth from the current base. But what about the year after and the year thereafter? The opportunity, the one in a lifetime opportunity for this budget is to define a path for the next few years so that it's not just about getting out of this current pandemic, but it is about setting India in the right position for Atmanirbhar India, for Make in India, for the next 10 years. And that's where it needs to announce, and we can talk about that, a whole set of new initiatives.
Okay, let's talk about those whole set of new initiatives that you spoke of. And CB, let me get you to take that forward, and then I'll get TV Narendran and Sanjiv Bajaj to chip in. If the expectation is that this is going to be a budget that focuses on rebuilding, not just on recovery, but focuses more on rebuilding of the Indian economy in a much more equitable, inclusive way, then what will be the specific initiatives that you're expecting?
So, it's absolutely right. It's going to be a budget which will phenomenally focus on rebuilding, and that's going to be very, very critical as we go along. So, as an FM has mentioned, as you know very well, that this is going to be a once in 100 years type of a budget, and she's talked about three critical components, and I think those are something that we are going to see, that livelihood, and of course growth. That's going to be critical. And as we look at the budget, these are three areas that one would like to really need to look at. Most of all, the budget also needs to be inclusive at this point in time, which is going to be very, very important. And by that, I mean that it should really include not the stressed sections of the society, as well as the stressed sectors of the society. So the vulnerable, of course, of the society, they have suffered deeply, as we have seen at the Oxfam report pretty much. So these sections of the society really deserve relief in the form of job creation on the Manrega outlays. And the budget must also ensure that the sectors which are seeing a positive growth are sustained. And at the same time, the sectors which are severely stressed, such as tourism or aviation or the retail and other services, those must be encouraged. And I think from CII, what we have been very strongly talking about, growth and employment, that should be key priorities for the forthcoming budget. And the key drivers of growth are public and private investment, consumption, and exports. I would really like to, and that's why we are saying that this has to be a landmark budget, because all of this would really need to be taken into account. While the government bears major part of the investment responsibility at a time when balance sheets of private sector are really under repair, and with infrastructure being a force multiplier, ramping up government expenditure on housing, roads, rural infrastructure, those are where from jobs will come. So I see a lot in terms of what the government could do in terms of really rebuilding the economy. And again, it's not just this year. What we need to really focus on is how do we really get on to a comparison this year and next year. So this year we will be comparing with a rather low base.
Okay, yes, you're right in pointing out that it can't just be about the next year. It will have to be a roadmap for the next 3 to 5 years to ensure that we continue to track 8% plus, which is, of course, the ambition that we've set out for ourselves. But, TV Narendran, let me come back to you. Everybody wants higher infrastructure spending. People also expect the government to spend more on health, spend more on education, provide more on NREGS, provide more for sectors that have continued to see stress like tourism, etc. But there are fiscal constraints that the government is working with. CB brought up the Oxfam report, and one of the recommendations of Oxfam is to actually bring in a wealth tax. Is that something that that CII is prepared for? Are your members talking about it? Is there apprehension that perhaps the budget could unveil some such thing?
No, there certainly are apprehensions, but the question is, will that plug the deficit? Will that solve the problem? Or will that hurt the sentiment? I think that's a question to ask, because to me, yes, there is a concern on the fiscal deficit. That's not something which we should try to solve within a year. We should take a longer time frame, keep that in mind. We should also be conscious of the fact that there is a lot of liquidity out there in the ecosystem outside of India. We should look at how can we attract foreign investment. We've done a decent job of it, not just the portfolio investment, but also FDI. How can we get more of that in? We should look at how can we generate revenues from divestments. I think, again, the government has announced some plans. We need to execute on them. So there are multiple ways. And I think, as we've already seen in the last few months, GST collection has gone up. I think it should be important. It's very important to get the economy on track. People should have the confidence that things are positive. They will start spending. And companies, if they're confident that the demand is there and the profitability is there, will get back to investing on capex. And I think it's a cycle that we need to nurture. The pandemic, the worst of the pandemic seems to be behind us, but we need to nurture the economy.
Sanjiv Bajaj, let me put that question to you. TV Narendra is saying that is it really going to plug the fiscal deficit, or will it actually sour sentiment? The question, though, is that is corporate India preparing itself for a one-time billionaire tax given the current situation? And that seems to now be the buzz, or at least part of the recommendations of the likes of Oxfam.
So, Shireen, maybe that was a question we should have put into the survey as well. But actually, as you pointed out, 50% of our members are small businesses, so it may not apply to them. But I have a fundamental issue over here. When you talk of wealth tax, when you talk of fiscal deficits, when you talk of inflation, when you talk of interest rates, we look at ourselves from the lens of the Western developed world. But we are an Eastern developing country. The Western world, and this was put forward in a recent article by the ex-BCG Asia head Janmejay Sinha, the Western world has already spent its money on infrastructure, on capital investment. It is now a working capital society. Hence, it goes by a different set of ratios. We are applying those ratios to a country like India, which is a capital deficit economy. We need money to build infrastructure, to grow, to get to where they have come to. Our metrics have to be different. The West is a nuclear society. People live alone. After them, the money goes away into all kinds of purposes, and that's where the tax comes in. When you look at the East, we live together. Families live together. We are a joint society. We have to look at rules that suit ourselves and not pick up from what's relevant in the West.
Okay, so you're saying that a one-time wealth tax is not necessarily the best idea in the Indian context. Let's see if the finance minister agrees with that point of view or not. But Chandrajit Banerjee, let me ask you about what the expectation now is in terms of revenue mobilization. Industry's wish list is, asset monetization, aggressive disinvestment. There was an aggressive disinvestment target in the previous year's budget as well, and we're nowhere close to that target of 2 lakh crore rupees. Now, the government has made it clear that it intends to move forward on strategic disinvestment, etc. But these are long, complex issues. So given the challenge on the fiscal side, what is the realistic expectation on what the government may do on revenue mobilization? For instance, we did a market poll of fund managers on whether we could possibly see some tweaks as far as the long-term capital gains tax regime is concerned or the STT regime. And the view there is also there is some apprehension that perhaps that could be a lever the government may choose to exercise. So what kind of measures do you anticipate on revenue mobilization?
I would think one of the most important things, the government has a huge opportunity on that, I would imagine. And one of the things that they should really clearly focus on would have to be growth. And I think that's something that and that itself would be would bring in the type of revenue and the revenue mobilization that you talked about. Revenue projections would also need to be seen in accordance with the current trends where tax revenues may miss the mark. Therefore, alternate sources, as you said, would need to be emphasized on. And I would think there are several ways to boost revenues. Privatization of PSUs, including the loss-making and profitable PSUs. It's an imperative. And it to be carried out as per a sort of a defined plan. So probably a very strong separate ministry looking at disinvestments, and the government can reduce its stake definitely below 50%. Then there are others, and like the assets such as land, infrastructure, those can be also monetized to raise revenues. And I think these are ways the government should really look at to see how there are alternate ways. So I would imagine that we would see some of it definitely coming into the budget, but very, very strong focus and an implementable and a roadmap. This is now the right time. You have the markets to be behaving very strongly. So we really need to have a very focused and a very well implemented disinvestment roadmap to be chalked out.
TV Narendran, I want to come back to you and link the issue of jobs with one of the sectors in focus, which is manufacturing. Now, the stated intent of the government is to, through the PLI schemes, try and drive up manufacturing, which has been stuck for the past decade at about 16% share to GDP. The remaining PLI schemes, the expectation is the budget will take that forward. But how do you believe the government is likely to link that to job creation specifically, and what would the wish list be?
So, manufacturing is obviously not an easy problem to solve, and that's reflected in the fact, as you said, that the numbers have been stagnant. Because manufacturing depends a lot on what happens inside the factory gates and what happens outside the factory gates. So while the industry can be tasked to being competitive inside the factory gates, there's a lot that the government, both at the center and the states, need to do to drive competitiveness outside the factory gates. And I think India is unique in a way that when you compare with East Asian economies, India has a large domestic market. So why should we not leverage that? Why should we not get manufacturing into India, offer the incentives that the government is offering now? And we have a fantastic example in the auto industry. We offered those incentives, got everyone coming to invest in India over the last 30 years. It created an ecosystem of auto component manufacturers who are world class. So we first made for India and then exported to the world. So we have an example of a success story which we don't celebrate enough. And I think there is a need for us to look at it from that point of view. It's not about controlling everything like it was pre-91. We are opening up for investments. You can have 100% ownership, which was not there pre-1991. Get the best in the world. Let there be enough competition within the country. And we should facilitate it. We should help local companies come to scale so that they can compete in the global markets. And we should address the costs outside the factory gate. Hence, infrastructure is important. Hence, effective tax rates are important. Hence, the ease of doing business is important. Because oftentimes in India, we take a lot of time to do things which happens in 2 to 3 years in other economies to build factories. And unless you make it simple, time costs a lot of money in India, particularly with the high cost of money. So I think there's a lot that needs to be done. The government, I believe, is moving in the right direction, which is good for manufacturing in India.
Sanjiv Bajaj, CII's wish list to the finance minister focused on the need for greater financial sector reforms if India is to achieve that $5 trillion milestone that we've set out for ourselves. In that context, what's the expectation? Do you believe that there could be a PSB privatization roadmap that the budget could unveil? Is that something that you would expect? And more importantly, we've already seen, for instance, from the RBI, a new governance a framework being announced as far as NBFCs are concerned. The fears that the market had with respect to CRR and SLR, those have been at least squashed for now. But what is the expectation on what could happen as far as NBFCs are concerned?
So, what we expect to see is really an all-round strengthening of our financial sector if we have to support the real economy. It firstly means you have to resolve the NPA problem, and a large part of that is with public sector banks. Focus on multiple bad banks to create sector-specific or level of bad debt-specific books and sell those off. Capitalize the core ones, divest from the rest, so that they can run professionally, build their own capital. You've seen the kind of capital that the private sector banks raised last year. The same is required from the public sector banks. So that's one. The next that you have to do is we have to focus from a government's point of view on infrastructure, on health. These will require large long-term investments. We need a development financial institution. If today Germany, Korea, China can have one, even with their stage of development, I think India needs one so that we can access long-term debt capital, which many other companies, including banks, are not suitable to do. So the third is when you talk about NBFCs, many NBFCs have become large in the last decade, but were being supervised with a very light touch. And that is what RBI has reinforced, that they will tighten up supervision. They have recognized the role that NBFCs are playing for this economy and are likely to continue to play. And I think what we are seeing from RBI, while some more detail is awaited on different formulae and stuff, but what we are seeing is very pragmatic. You have to also keep in mind that just rules don't create good outcomes. Good managements create good outcomes. A good and effective regulator also creates good outcomes. Otherwise, banks should not have been going belly up in the last few years. Only NBFCs should have been. But a combination of these factors will create a more robust financial services sector for us, for our country, and this should help us going forward.
Okay, so a pragmatic governance structure, you believe, is the need of the hour, and the measures announced, or the policy paper announced by the RBI specific to NBFCs, is a step in the right direction. CV, let's talk about some other specifics now. And I noticed that as part of CII's wish list, there isn't any long recommendation on direct taxes, exemptions, and so on and so forth. So, so no hope there?
So, I would imagine that, we should, in terms of like, if you really look at, there has to be something, you have to somewhere bring up demand, right? And that's where I see that there could be a lot that can be done in terms of taxation. It's not that we are not having any hope on taxation. It's just like how would the finance minister really look at creating that? And I think both, we need to see how employment can be generated, and there also I see a lot that can be done in terms of creating some changes in the taxation. For instance, for companies, the government had come out with the 80JJAA says something that we would really look at going up from 25,000 to 50,000. That's itself could be a very important thing. And on the direct tax part, on the income tax, I would really tend to see that the middle income group, where from the demand comes very strongly, there is a strong expectation that we will see a lot more relief over there, both in terms of standard deductions and other, so that there and demand would need to be generated from that group. So that's going to be very critical. So really creating for the lower strata of the society, we need to focus on employment generation. But as we move towards the middle section of the society, that's where spending will come from. And I would think that they need to be encouraged to travel. They would need to be encouraged in more. And I think that's where the finance minister, I'm quite hopeful that we will see some very strong intervention, definitely.
Well, the tourism sector, the hotel sector, the hospitality sector is also hopeful that there will be something to boost consumption on that front. But TV Narendran, the number one risk or fear that the CII CNBCTV 18 poll highlights is rising input costs. And we've seen that across the board. Auto companies hiking prices, FMCG companies hiking prices, fuel now in Bombay edging closer to 100 rupees. And of course, the demand for a rollback on excise duty hikes has not happened so far because the government is also trying to shore up revenue. So given that, how much could that spoil sentiment? Could that hurt demand as we move forward?
I think what has happened is both globally and in India, the recovery has been sharper than most people expected, led by China. I think China bounced back quite fast, and the numbers. China's had positive GDP growth. On most metrics, it's positive. Even if I look at an industry I'm familiar with, steel, China's consumed 10% more steel than last year. So incrementally, China has consumed as much steel as India has consumed this year. So that's the kind of scale at which China has bounced back. And that has had an impact globally on many products, including oil and everything else, right? So to me, it's a reflection of the robustness of the recovery in some sense. So yes, there are some inflationary signs. There's also a lot of liquidity in the market, so that also adds to it. But I think things will settle down because obviously supply will catch up fast in many areas. And I think what we are seeing is a correction going to levels which are better than what it was pre-pandemic, and it will kind of settle back to the trajectory it was taking before the pandemic. So I think just now there's a short-term risk or a short-term concern. But I do believe over the medium to long term, as supply chains get stable, investments come back in, and the demand stabilizes, you'll see more stability. And we would have probably lost a year or two because of the pandemic, but we'll go back to the track that we were in before that, globally and in India.
Okay, so you hope that this is going to be temporary and we will return to normalcy as these imbalances work themselves out. But Sanjiv Bajaj, I'll give you the final say now. In terms of credit growth, in terms of the kind of demand that TV Narendran was speaking about, what's the expectation? We have started to see a tick up there. How much do you believe we could grow from here? What are you picking up from the market in terms of demand and where it could be headed?
Shireen, when you look at demand coming, let's say, from consumers, we are close to 90% of where we were pre-COVID. Assuming, of course, that the worst is behind us as far as this pandemic is concerned, I believe we are only going to see improvement month on month. I believe that, and the poll shows that 25% of companies polled are having a better year than what they did earlier. But more importantly, 50% are at least at 80 to 90% of last year. So while selectively some industries, and we know which ones are still lagging for obvious reasons, my expectation is to get to normal growth by first quarter of the next financial year, and then we should see steady growth. There's fortunately enough money in the system, even in the pockets of middle class and above consumers. There is more money now than what was a year ago because they've not spent much in the last year. They only need the confidence which the government and we have to give them together that tomorrow is going to be better, and they will go out and spend, and that will bring down some of the short-term volatility that we are seeing in commodities and other prices.
Yes, confidence is certainly the need of the hour, but it will take more than talk to be able to drive that point forward. The market, investors, of course, the salaried class and industry all hoping that Finance Minister Nirmala Sitharaman will deliver on the expectation that this is a budget like never before. TV Narendran, Sanjiv Bajaj, Chandrajit Banerjee, we will check back in with you on the 1st of February when the Finance Minister delivers the budget. But thanks very much for joining us today to take us through what you expect and, more importantly, what you hope for. We'll take a break. There's a lot more coming up here on CNBC TV 18. Don't go anywhere. We're back in a moment.